It is set to be the most profitable gold mine in the entire United States by miles. Silver, $75 an ounce. Gold, $5,500 an ounce. In this video, guys, we're gonna talk about my gold price prediction and my silver price prediction. I'm gonna show you the most profitable gold mine in the entire United States that people don't know about, why the Pentagon's invested in it, why the Department of Defense is invested in it, and what the institutional money is doing to cause us to see $5,500 per ounce on gold and potentially 75 on silver, all in this video. Now, in this video, you're also gonna learn how I get discounts on gold and silver cheaper than what you're going to find online 9 times out of 10. And I'm going to provide you my strategy on how I'm able to get a line of credit against this silver and against this gold and actually acquire my interest on that for free. I literally use this to become my own bank and then buy cash flowing assets that pay me a return even more. So before we get into why I believe the price of gold is going to be $5,500 and silver at $75 an ounce, and I think that's going to happen by December of 2026. I want to just give a little bit of a history behind gold and silver and what led us to where we're at now. You need to understand this because when you actually understand assets that you're investing in, it becomes less risky. And I don't want to say you're able to predict, but you're able to really give a really educated guess based on logic and history, because it repeats itself, to why gold and silver could be some of the best investments you could make in 2026. So let's go back to, Jesus days. The gold silver ratio has always been really between 15 and 16 to 1. So this is 15 ounces of silver here, got 1 ounce of gold. This was the gold silver ratio in 1792. It was 15 to 1. There's the Monetary Coinage Act of 1792. It regulated it at 15 to 1. That stayed in place until 1834, when we had another Monetary Coinage Act of 1834 that changed it 16 to 1. And we really stayed in that window for quite a long time. Stock market crashes in 1929, followed by the Great Depression. And in 1935, the United States government said, hey, it's illegal for you to own this. We're gonna buy it back from all citizens at $25 an ounce, or you're gonna spend time in jail, or we're gonna fine you $10,000. And even though gold was worth 35, they bought it back at 25. That's really a form of tax, and they're able to kind of make a spread there. That happened right before World War II. Now we exit World War II, and keep in mind, we're still on the gold standard, right? The government bought back all this gold from their own citizens. When we get out of World War II, the US did really well. We went from a recession and a depression to an economic boom. And the world looked at us and said, hey, the US did really good with the economy. We need to look at what should be the global currency. So there was the Bretton Woods Agreement of 1946, took place in New Hampshire. A bunch of leaders from different countries decided that the US dollar would be the world reserve currency. We stay that way until 1971. We're backed by physical gold. Richard Nixon takes us off the gold standard, and then we become the petrodollar. We're to be the dollar that's used for oil and energy and international trade and that stuff. But we move into this hyperinflation environment, and that's what we've seen all the way into 2025, and we'll probably still see in 2026. And people got tired of our dollar. They said, look, you're not really backed by anything anymore. The full faith and credit of the United States government doesn't mean anything to us, because every time you need more money, you just print money. During COVID, EIDL loans, SBA stuff, you just print money and it devalues the dollar. Now I'm gonna give you a statistic. If you take the 10 most recent rate drops, every time the Fed says, hey, we're dropping rates. The most recent one was September 17th in 2025. 8 out of the last 10 times, in the following 60 days, gold skyrocketed. You're talking 3%, 8%, 15% gains following rate drops. Why would that be? Well, when rates drop, the dollar devalues. That means bonds and treasuries are not good investments. That means money leaves bonds and treasuries and assets that are tied to the dollar, and it moves into assets that hedge inflation. Now, what are the two strongest assets that have hedged inflation since the beginning of time? Gold and silver. So that's why we saw gold go from $3,600 an ounce September 17th all the way to $4,400 an ounce within just a few weeks. We saw for one of the first times in history, silver actually outpaced gold. We saw trades not being able to be met. We saw contracts not being able to be fulfilled. London Exchange fell apart trying to fulfill silver contracts. And silver showed us that we are indeed in a supply deficit. Now for our 5th year, we'll talk a little bit more about that later. So want you to understand the economic background of why investors move into what we call non-yielding hard assets during times of inflation. And we've done a very, very good job at inflating our dollar, devaluing it, having countries lose trust in the US dollar. And that's why you've seen an astronomical amount of gold and silver be purchased at government levels, at state, at country levels. We're talking Turkey, we're talking India, we're talking Russia, we're talking Mexico, we're talking Brazil, we're talking China, we're talking the United States here at home. We own more gold at a central level than any other central bank in any other country combined. So that's your economic history. Why am I thinking it's gonna hit 75 an ounce on silver and 5,500 on gold in literally the next year? By the way, guys, if you're brand new to my channel, make sure to subscribe and tap that notification icon so you can stay updated on all the videos that I drop. If you're not subscribed to my channel, you're missing out on wealth creation strategies. That is all I do here. I've spent the last several years working with financial advisors, all to find out they're really good at helping you make 8, 9, 10% a year, which you can do on your own and not pay for it. I keep my money where it makes 8, 9, 10%, and I invest it where it makes 20 to 30%. On an annual basis, I'm generating 25 to 35% annual returns. I pay little to no taxes, and that's what you're gonna learn about on my channel. So make sure to subscribe. And hey, if you own physical gold or silver, let me know in the comments, let me know what you own. And I'm gonna give you some of my recommendations as well by the end of this video. Regardless if you're just getting started on investing in gold and silver, if you're a sophisticated investor, I'm gonna give you some strategies in this video to increase your portfolio, leverage it, and create cash flow using gold and silver. So now let's move on to the Stibnite Mine. This is a very interesting project. You can see here, the Stibnite Mine is like a 3,300 acre mine about 75 miles north of Boise, Idaho. Now, if we scroll down here a little bit, one of the things you're going to see is that it has the highest grade open pit gold deposits out of any mine in the lower 48 states. Highest grade means it's the highest quality, okay? It's gonna be very cheap to refine. Now, if we scroll down a little bit further, you're gonna see what's called all-in sustainable costs, ASIC costs of mining gold. That means essentially how much does it cost to get this out of the ground? Now, on average, the all-in sustainable cost to mine gold is about $1,400 to $1,600 an ounce. Now, with gold over $4,000 an ounce right now, as high as $4,400, there's quite a big margin there. Well, this Stibnite mine has the presence of some other precious minerals and materials that are a byproduct of mining this gold. And because of that, it's making the ore cheaper to mine. So you can see here that the two areas that they're gonna be mining actually have like a $500 to a $750 all-in sustainable cost. The cost to mine gold at the Stibnite mine is phenomenally cheaper than any other active mine in the lower 48 states. Now, you ask why that would be. Well, there's this interesting thing. The Department of Defense and the Pentagon have ownership interest in this mine. Why would that be? Well, there's this interesting mineral called antimony, which is needed in weapon making, which is needed with fire retardants, which is needed with military equipment. And until a couple years ago, we didn't think antimony existed in the United States. Well, it turns out there's over 140 million pounds of antimony chilling in this mine right here. So of course the Pentagon would get involved because presently, 90% of the world's antimony distribution is controlled by, I'm gonna get this wrong, Tajikistan, one of the stands, and Russia. So now we actually get to mine our own antimony, and this article over here, I'll go to one of these, says that we've got enough antimony in this mine to supply our defense needs with antimony for the next several decades. So I'm gonna read to you a couple things here. DoD ups investment to $59.4 million here, okay? Stibnite Mine is expected to supply roughly 35% of America's current antimony needs while also producing roughly 4.24 million ounces of gold over 15 years of mining. Now we go on to something that Forbes published here. Check this out as far as the reserves. 4.8 million ounces of gold, 6.4 million ounces of silver, 149 million pounds of antimony over 3,200 acres, 3-pit mining sites. Again, 35% of the US's antimony needs in the next several decades. When you're out there looking at what these advisors are doing, trying to sell you annuities, keep you tied to the market, which historically does 11%, keep you in assets where you're paying capital gains or income taxes. I'm over here in assets where I pay a little to no taxes. I take my gold and silver, I borrow from them. They appreciate at a higher rate than what I'm borrowing them from. And I go into assets like oil and real estate in very rich areas where there's a high presence of natural gas. And I invest in real estate markets that allow me to 2 to 3x my net worth every 5 years. That's what allows me to make 25, 30% on my money, while your advisor that, mind you, makes 100 grand a year and has no wealth, keeps you poor, making you 10%. So I'm gonna give you some of my wealth creation strategies stemming from gold and silver in just a little bit here. A couple other things I want you to point out is, why would you not be stocking up on an asset that has stood the test of time? Why would you not be stocking up on an asset that the institutional money owns. We're seeing retail investors come into gold and silver in just swarms in a larger amount than we've ever seen in the past because you guys are finally listening. So instead of watching Dave Ramsey or calling the 1-800 number on Fox or CNN, whatever news channel you want, which is all fabricated, by the way, whether you're left or right, I've seen these commercials get printed into existence. Randy, the radio guy, shows up and then some blonde lady in heels reads from a teleprompter. Neither of them know what they were going to talk about 30 seconds prior, and that's the garbage that you swallow up as financial advice in the media, in the ads, and on the news. This is what creates multimillionaires and billionaires, and I'm going to dive into those strategies in a second. So we scroll down a little bit further here, and I want you to see Tajikistan and Russia control 90% of the supply here. China buys a lot of antimony, but it stems from Tajikistan and Russia. Now, I also want you to see who owns this project. Okay. Have you ever heard of a company called BlackRock? They're, I don't know, one of the biggest wealth managers in the United States. They own basically everything. Well, BlackRock here owns one of the biggest working interests in this mining project. There they are. You can look at the other companies here. Of course, BlackRock earlier said, we believe gold will hit $4,000 an ounce by the end of 2025. Of course, you could say that when you're controlling the supply, when you're invested in one of the most profitable mines with the highest high-grade deposits out of any mine in the United States, you can afford to say that. You're not really saying you think gold will hit $4,000 an ounce. You know it will, and you're going to make sure it happens. Okay. I will talk to you about why I'm seeing 75 on silver and 5,500 gold by the end of 2026. But right now, I want to talk about how can you actually make money with this stuff. Okay. I have a line of credit against my gold and silver. It's very easy to do. The minimum line of credit with the company I use is $15,000. It's 75% loan to value. That means I've got to have about $20,000 of silver or gold to get a $15,000 line of credit. Now let me give you the bad news. That line of credit is usually the prime interest rate plus 2 points. It's gonna be 9-10%. That sounds bad, right? Nope, it isn't. Here's why. Gold has averaged over 11% in the last 30 years. Silver has averaged just under 10%. If my silver and gold in a 30-year average are growing at the same rate or slightly higher than what my interest is, I can simply have a line of credit on this much right here, and at the end of the year, it's appreciated. I can sell this off the top and I've acquired my interest for free. But even more importantly, if we look at the last 10 years, gold has done 400% and silver damn close. In 2015, 100 grand of silver would be worth $400,000 today. In 2015, $100,000 of gold is worth about $420,000 today. In 2015, $100,000 kept in paper money buys you $73,000 today. So if we look at the current economic environment and what it's called for over the last decade, we stand to have a lot more appreciation, gold and silver going up, than just 10-11%. This year, we've already proved that amongst both of these assets, okay? So what I do is I have a line of credit. I just sell a little bit off the top at the end of the year to acquire my interest for free. And then I go into oil that cash flows and allows me to pay no income taxes. I don't pay income taxes on my earned income because I invest in oil and energy wells. And then I go into real estate so I can get appreciation and so I can get cash flow. And so that cash flow can allow me to pay little to no taxes on the cash flow because I'm in assets that allow me to depreciate. We can talk more about that later. Now, before I end this video, why do I believe we're gonna see $75 an ounce and 5,500 on gold? Let's start with silver. The reason I believe we're gonna see $75 an ounce is because silver is in its 5th year of a supply deficit. Only about 27% of silver mined today is mined from a silver mine. We have completely depleted our high-grade shallow deposits. It's much easier to mine gold, zinc, copper, or lithium and say, hey, oh, there's a little bit of silver in there. Let's get that while we're getting this copper or gold out of the ground, right? It doesn't make sense for us to recycle stuff in garbage plants and solar panels and medical equipment just to extract the silver out of it. It's cheaper to just get it as a byproduct of mining other minerals rather than mining silver itself because we've depleted all the high-grade shallow deposits. Now, we literally outpace supply by the amount of silver we take by 8 to 10x year over year over year. By the year 2035, we will have exhausted all of our high-grade shallow deposits of silver, and whatever is left is left. And if we cannot have technology meet that demand, it's kind of like Bitcoin. Whoever owns it and is going to control the market. So we're in our 5th year of a supply deficit. That's why we've seen more retail getting into silver, and that's why we've started to see central banks stock up on silver. We literally saw institutional money get into silver at a higher rate than gold for one of the first times in history, literally in Q4 of 2025, and it's continuing to happen. You've got countries like India, China, and Russia that are increasing their silver intake, even though some of those countries sit on some of the richest silver deposits. They are importing silver. They are buying silver at a government federal level, okay? Why are you not, as an individual, doing what the government is doing, okay? Don't be distracted by the news and what they want you to hear. Be doing what they're doing and copying it, okay? 5th year supply deficit. We're gonna continue seeing that. We're gonna reach a pinch. There's literally a monster box of silver in a Tomahawk cruiser missile, okay? Which is 500 ounces, 17 to 19 kilograms of silver in a Tomahawk cruiser missile, okay? We need silver. We use it in medical equipment, semiconductors, hybrid batteries, solar panels. It has utility use that gold does not. Gold is an institutional investment. The Bank of International Settlements, okay? And the US Treasury said gold is the only tier 1 asset outside of the US dollar, but everybody's dumping treasuries and bonds, including international foreign investors, and they're going for this. That demand's gonna continue increasing. And we've already seen companies, I'm gonna read you one actually, that are saying, hey, Goldman Sachs recently boosted 2026 gold price target to $4,900 an ounce. Bank of America said over 5,000, okay? Randy Smallwood, CEO of a major mining firm, told Bloomberg TV that Bank of America's outlook is entirely reasonable, okay? In fact, he said by the end of this decade, we're looking at $10,000 an ounce before the decade ends. That is why I get into gold. That is why I get into silver. Those are my gold and silver price predictions, okay? And if you want to learn more about how I build wealth, the type of deals I get into, how I'm able to pay little to no taxes legally, how I'm able to get into cash flowing assets that make me 25, 35%, and other institutional grade assets where I'm able to make 8, 9, 10% on my money, just where I simply save it. There's a link in the description to join the Capitalist Network. It is mentorship from me, all of my wealth building partners, everybody I'm in business with, the real estate deals I do, the oil deals I do, the tax strategies I do. We do live trainings. We've got modules in there. We do monthly meetups. We send a newsletter every Monday. You guys can get access to a 7-day free trial. Link is in the description. Hopefully you loved this video. Smash that like button. Let me know if you have any questions in the comments, and I'll see you in the next video.